By far. The most asked question in finance right now is the stock market rally overdone? It is overasked, but it is also very important, so let's ask it again. Welcome to Trading Nation. I'm Brian Sullivan. Joining us by phone, Tony Dwyer, Chief Market Strategist at Canaccord Genuity. And you've got a clear message, Tony, for those who say that this is overdone. What is that message?
It depends on yeah, it's overdone if you're looking at the next 15 minutes. It absolutely is not overdone in my opinion. Based on history, if you look out, maybe 3, 6, and 12 months later, the fundamental backdrop has been good. I know that President-elect Trump gets a lot of credit for the rally. The rally was happening anyway, and it goes back to it's always about the fundamentals, Brian.
And so based on the fundamentals, are you bullish longer term?
I'm still kind of off the hook bullish, and the reason is, let's look at what we have. Even with today's rate hike and guidance from the Fed, we still have a historically accommodative Fed. We have a steep yield curve, meaning banks want to lend. We have a demographic tailwind of the millennial generation. We've got a new cycle high in consumer confidence and small business confidence, a historically low household debt service ratio, improving housing trends, recovery in the global manufacturing outlook, and you've got the fiscal stimulus expectations out of the new administration. So with that backdrop, again, with positive credit, it's hard to make a case that everything should be sold longer term.
Yeah, and do you think, and I made a point on Power Lunch on Wednesday that basically I called the Fed irrelevant. And sort of what I meant by that is, with everything else going on, they may not be the sole driver. That may be tax cuts or real economic growth, whatever it might be. Do you think we're going to return to an era where actual fundamentals matter more, that if we say a company makes, a little more money on the bottom line, that a stock becomes a better value?
Yeah, and we're going into that part of the cycle, Brian. In the first half of an economic cycle, it's always about Fed policy. Like, we try to believe that this has been a unique environment. Yes, it's unique because we went to zero interest rates with quantitative easing, but the Fed always manipulates the curve coming out of a recession. They drop interest rates too far, the data lags, and all of a sudden they shockingly see inflationary expectations go up, and they have to tighten to the point where you end up in an inversion of the yield curve. So I would make the case that it's always about the Fed. It's about their ability to overdo it on the easing side in the front half of the cycle. And then to your point, it gets tougher in the second half of the cycle because the credit environment deteriorates slowly. And that, I think, is, I'm kind of known as a perma-bull because for the last 7 years, the real Fed funds rate has been zero. That's kind of, we're transitioning now into a period where you're going to have a terrific fundamental backdrop, but you do see the light at the end of the tunnel, and it's not the sun.
So what is the biggest risk then going forward, Tony?
To me, the biggest risk historically is you get some kind of news item out of nowhere that creates a correction. Corrections are only natural, normal, and healthy until they happen. And then when they happen, everybody begins to expect a recession. We've been buying those, and we will continue to buy those until you invert the yield curve. So the risk to the market and our fundamental bullish outlook is when the Fed gets over-tightening and it brings up short-term interest rates that make the long end go through and you invert the curve. And that's, Brian, that's the question I get from every account. What level of interest rates shuts down economic activity? It's not an absolute level. It's whenever short rates go up enough to invert the curve.
All right. Tony Dwyer, Canaccord Genuity. Tony, we appreciate your time and your insight as always. Thank you very much for joining us.
Thanks for having me, Brian. Have a great day.
Take care. And folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.